Tracking. Iceberg
Greetings in the
ESL.
name of Yahusha Mashiach, Melek of Yasharal, Kohen forever, according to the order of Melchizedek. All esteem, honor, and glory unto our Lua Yahuwah. My name is MELEK Shalomoh. This is MELEK Shelemoh Trading, and I'm gonna let this trade disclosure and this risk disclosure play before we start.
General disclosure. All MELEK Shalomoh Trading LLC materials, information, and presentations are for educational purposes only and should not be considered specific investment advice
Stop run
nor
ES by
recommendations.
Wipeout.
Risk disclosure. Trading futures, equities, and digital
Tracking.
currencies
Iceberg
involves
ESL.
substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
All right, so I'm gonna test out just having this volume real low, so maybe you could hear some of the market pulse in the background. Just testing this out. Let's see how it works when I upload the video, if it's too loud or if it's even audible. All right, so today is what's the date? The 24th of April, 2025 is 11:48 a.m. Eastern Time. And I'm going to do a trade recap here on the ES futures. And I'm going to demonstrate here the Wycoff theory. So let's go back to the open. All right, so this is the open here. We have buyers. We have selling sweeps, which is indicative of a reversal. When we get selling sweeps, we usually get a counter rotation. So price push down. We created the low or the IB low. And this is something I have to adjust. Let me just throw this on right now. All right, so that's the IB low, 58.9338. All right, so price had this selling sweep. We pushed up. This is the volume point of control at the open. It's at 54.09. We have buyers pushing up above there. You see there's a bunch of buying sweeps as we push up, right? So buying sweeps are those green bubbles right there within the price, within the bubbles right there. So let me just point those out. Right, so the red dots are selling sweeps, the green dots are buying sweeps. You can see how much it is, 251, 276. We have 319, 52, 110 on the sell sweeps. So we're pushing up on these upper deviations, these dashed red lines, right? We're pushing into heavy liquidity, heavy buying, good volume. And we have our first pullback here, right? Let me just open this up a little bit. Right, so at Camaria R3, we had this big push up here into this liquidity. Well, our first attack on the liquidity was down here at 54.2980, or let's say 54.30. And we had this initial pullback and we pushed up. So strong buying at the open. Right, so we keep pushing up. Next liquidity target was here at 54.4975. So we had the initial pullback off of that as well. Well, not the initial pullback, well, we had a pullback from there as well. But on my other chart, I want to just pull this across real quick where there's better labels. Let's see. Right, so preliminary supply was, let's see, open this up, 54.49. Right, so let's go across here. 54.49, right? So that was at 10:09, right? So let's go back across to this chart, 10:09, right? So this is basically our preliminary supply right here, right? So I should label that. That's just under this liquidity, 54.49, right? So that's the preliminary supply. So that's the first sign of selling right there. That's really where we get this consolidation, a small change in character as we move sideways. Mostly we weren't moving sideways, we were just getting small pullbacks and just taking off, right? So we had a little consolidation right there. So we labeled that preliminary supply. We had the liquidity rejected off of the liquidity. We had buying sweeps going into the liquidity, and then we had this consolidation. We attacked the liquidity on the offer again, and we pushed through, right? So pushing up here, we get our buying climax here, right? And the way we label this as a buying climax, we're looking for heavy volume. We have heavy volume here, right? We have heavy volume pushing into it. We come up here. This is +2 VWAP, upper deviation, right? So we get our, let me just open that up a little bit. We run into this liquidity level and we push up just above it, create like a little stop run. And then let's see if we actually got stops here, stops at this point. We actually have absorption. So selling absorption, buying sweeps, right? We don't have a stop run though. So we create our buying climax. And how I know this is a buying climax is because of the automatic reaction. So basically, we come down to this level right here, create the buying climax at, let's see here, 54, 55, 85. So let's say 54, 56. So that's the automatic reaction. So that's the first sign of real selling, right? So you can see here, we had a nice drop from the buying climax down to 54, 56. So after that now, I'm looking for the creation of the uptrust. Now, the thing about the market today is that the buying is strong, so the distribution process will take a little longer compared to like a really heavy selling market. If we get like a retracement at the open, like this is basically a big retracement, right? But if there's heavy selling, this would play out a lot quicker. But if there's heavy buying, that means there's a lot of buying interest, and the bigger traders have more opportunity to get better to sell at higher prices. So they're gonna extend the distribution, right? So after we create this automatic reaction at 54, 56, we push up here and we create the uptrust, right? So this is a level here that I have. It's my accumulation and distribution indicator from quantum trading from Anna Cooling, and it basically tests how much times this level here got touched and we rejected. So right now it's at 14 times, right, that we've hit this level and we rejected. So that's a good pivot level for me to execute a short and to look for the uptrust, right? So we push up to this level, we get heavy buying volume, we get the buying spikes, we get the stop runs, we get the selling anchors here. Let me just point this out with the arrow. The red is the buying stops. That's the VP buying pressure attack, right? So that's the buying pressure. These here are selling anchors, or I call them selling anchors, but it's basically it's selling absorption, right? From the absorption indicator, that's selling pressure, right? So we have selling pressure right there, and we also have the volume pressure imbalance spiking as well, right? And now it's pushing down. That's that green line right there, and now it's going into selling territory. So It's tricky to take this kind of trade, right? Because in the Wyckoff theory, you have to know how the structure develops for you to be able to anticipate these trades. These trades are not for you to wait for a lot of confirmation, because if you wait for too much confirmation, your stop loss is basically going to be larger than it's supposed to be. So I'm taking these trades here, right? Taking this first trade, got stopped out, take another trade, got stopped out, and then I'm in the trade again, right? So when I get this short here, we pushed down, we came back, retested my entry, and then we start pushing down again, right? So I have to be careful when you're taking a short at the uptrust, you're really looking for a nice move to the downside. Just like the buying climax had that nice big move, we're looking for this nice move to the downside. Now, if it doesn't move, if it doesn't have volatility in the move to the downside, like heavy selling, we have to be cautious, right? So when it pulls back, I stop out, right? We create a test, right? So I have to look out for that. So I'm stopping out here with my trailing stop, stop out, I jump back in. Once we don't push above this level anymore, heavy, it's a big bubble right here. We don't have to push all the way back up to create a uptrust after distribution. Where I'm thinking now that the selling pressure is definitely in there. If we didn't have the selling pressure, this would push back up to create a uptrust after distribution. We don't get the uptrust after distribution, we get a test. Jump back in the trade, let it push down. When we pulling back, stop out, because we don't know if this is going to come all the way back here. So I'm going to take the stop out. Once I get the exhaustion again, I'm back in the trade. It pushes down, hits this upper deviation from the London session, pushes back, stops me out on the trail and stop. We push back up to this volume point of control, which is this green line, because I'm looking for these LPSYs, right? So you see we have LPSY number one here, short. This is another LPSY, so short, right? So when I take this short here, I'm looking for the continuation to the downside. We come to the automatic reaction and I stop out right there. So let me just move this across. And I must admit, right, this is you have to be really acquainted with the Wyckoff theory to have the confidence to take these kind of trades. But this is how my mind works. I'm kind of contrarian, so the short trades is easy for me, right? So I look for these kind of signs here. We have buying stops here. We have exhaustion where you see there's no bubbles right there on the last price, right? They're not buying up here anymore. That little red line right there, that's the best offer. They're not hitting the best offer. I stop out as we push above this structure right here, but jump right back in. We came down here, it starts pulling back in a kind of V reversal. I'm stopping out, waiting for it to get to the volume point of control at this point here, the green line. That blue line is this here, this session trace counter. So it's similar. It's kind of like a TPO kind of trades counter is kind of like a TPO, like from the market profile, it's just counting how much trades is being executed at certain levels. So it's similar to the volume profile, the VPOC, right? So jump back in this trade, we push down here to this upper deviation from the ETH session. I stop out, take profit. When short here again, let me open that up a little bit so you can see. Because I really operate on like a 30-second time slice. So let me open it up to a 30-second time slice so you can see what I'm seeing at the time of the trade. All right, so we push back up here. We get the exhaustion. We get buying stops again. We have these iceberg sellers. I'm back in the trade. It pushes down and I take profit. The reason I take profits here as well is because I'm already at, I passed this evaluation, 9,000 to pass the evaluation. I'm at 93.75. So there's no need to really hold this trade anymore. At this point here, I had like 8,500 or something like that. So I just needed like 500 more points, right? So these were 12 contracts a piece, a trade. So that's why I stopped out right there. And it also was a good decision because I would have probably stopped out here anyway. If we push down like this and we start reversing and coming back to this volume point of control, let me just highlight that again. Right? So it's at 54.67. So once we push down below the volume points of control, if we're coming back to test it with this kind of a little bit of buying volume right there, iceberg buying, I'd probably stop out anyway. So let's see what happened, right? So it's reversing. So you see with these V reversals, I'd probably stop out anyway. So I just wanted to pass the eval, right? So we have all the liquidity right here as absorption. Took profit there, the liquidity, went short again back into the liquidity, and basically took my profit there past the eval, right? So that's like my little strategies for passing the evals. I take like 12 contracts and I'm looking to get like 12 points, and I have a 4 point trailing stop after 6 points is achieved. So once 6 points into profit, it starts trailing by 4 points, right? So yeah, let's see where we're at here now. Let's see. From the time of taking profits here, we came back and we created a uptrust after distribution because now we pushed above. Did we push above? No. I think we came right back to the uptrust. So this test is going to be right here at the uptrust. No need to really put another label there. We just came back, we tested the uptrust. So this is basically a test or uptrust after distribution. And what we're looking for now is these LPSYs again, right? To go short. Like this right here. You see the exhaustion right there, this former LPSY or this prior LPSY is a good place to go short. We have buying stops, but let's see if the buyers are going to take control. I usually would go short right here, stop just above this level, and we're trying to push down below this volume point of control. We're looking for heavy sellers, and we're trying to get down to somewhere around, like, let's say Camaria R4. So let's see if it works out. And let's open it up. Right? So LPSY, we have buying sweeps, we have stops, we have iceberg sellers, we have heavy volume going into the volume point of control. We're trying to get to Camaria R4. Let's see if we get that. We have this liquidity here to get past, so we need some heavy volume. We got that. But notice we have iceberg buyers and absorption here as well. Buying sweeps, this is supposed to move down from here and not push back up to the volume point of control. That's how we would know that the sellers are maintaining control. So we're going to wait, we're going to see, because we might have absorption here, right? We have the iceberg buyers, we have absorption here. So basically a retest of volume point of control. We have iceberg sellers stepping back in. We have the exhaustion right there, so you can stay in this trade. And once we keep below this level now, we're good to go. We should get down to Camaria R4. And let me just clean that up so you can see it. Right, so we have buyers coming back in. Let's see. Stop is above here. Because let's say you're in the trade from here, right? Your stop would be above here. Now we're trailing the stop to this level. And we have these iceberg sellers. They're thinking the same thing as us right now. So they're supporting our trade. We don't have the buying support on the bid anymore. We should get heavy selling pushing through, taking us to Camarillo R4. Could I expect a retest of this level here from the breakdown? They always like to do that. Like just before the target, you get a retest here. You see you get some exhaustion. I would trail my stop to above this level right now and wait to get my target. Let's see if we get it. And we basically got our target already. I think that that white line right there is where we hit our target. But let's see if we actually get further down to 54.69. So we haven't hit our target yet. Stop would be right above here right now. Right, so that would be your stop at this point. We have more exhaustion. I would move my stop down and stop out here if we push above. And we basically just stopped out there. Right, so that's how I would manage that trade. All right, here also is Mikhail Shalomo. I have another eval, past another eval, using the Wycoff theory, using quantum trading levels, quantum trading accumulation and distribution indicator for my pivot level, which is this red line right here. Looking for uptrust at that level, got my uptrust, and basically took these trades to the downside. All right, y'all, it's Mikhail Shalomo. I hope you all enjoyed the breakdown. And I know this Wyckoff theory is basically, and it's a black sun strategy. That's the name of it. That's what I call it. I know it's in the face of all this heavy buying, I know it's a very contrarian kind of strategy to implement. So I don't expect anyone to just lean towards taking these kind of trades. But there's things within my format that may inspire you to create your own strategies, right? So this is not a copy and paste strategy. It's it's um it's more personalized strategy, right? Using the Wyckoff theory. And I have the confidence in the short trades because I could take these trades up at these tops here, right? And a lot of people don't like to call tops. Like I always listen to Tom B, and he always says that I don't know where the top is, right? So he's waiting for more of a confirmation. Although sometimes I do hear him say that the best risk to reward is to actually take these trades at the outside edge, right? Because he's a volume profile trader. So basically, my trades sometimes line up with his philosophy, but we're not using the same philosophy of like the Wyckoff theory. I'm using the Wyckoff theory. He's using volume profile. But a lot of times, good strategies always kind of line up with each other because it's the same place on the chart to take the trade, right? But how we get to that point is a different mindset, right? He's using the outside of the volume profile. I'm using the uptrust or the impending uptrust after the buying climax here to get my trade, right? And it just so happens to line up with the outside edge of the volume profile, right? But I'm not using this as my execution indicator, right? I'm using the reason I have this volume profile here is to have this migrating volume point of control because I want to see when it moves up here and what price does when it does that, right? And Tomby also uses this within his strategy where I think he takes shorts or he would go long off of it, right? Depending on his criterias, right? So anyway, that's my little ramble on that. It's Mikhail Shalomo, Melek Shalomo Trading. Y'all trade safe and stay blessed. Shalom.